What a beautiful Monday to take a break and know that I can enjoy myself and come out and build the snowman, because honestly guys, what I'm seeing in the stock market lately is not really that short of disgusting. And you know, I'm not that much better. I mean, I've taken part in this behavior, but more out of trolling and fun, but this isn't really benefiting the community. I always thought that investing bridged the difference between multi-billionaires and just the average Joe with, you know, $100, $1,000, $10,000 is trying to start investing, because it's not about, you know, how much money you have. It's just about your knowledge. You're willing to learn, you're willing to be cost averaging and diligent, and everybody can respect that because we're all on the same journey. But this behavior and this confusing time in the stock market is starting to get frustrating. It's making people extremely disgruntled, really confused, probably making stupid decisions in their portfolios. And we're going to go back and we're going to discuss this. So I'm going to finish my workout in the woods here, and let's get into this.
Some moron, Tom Nash, says, how did this guy not make money in the last 5 years? Well, Tom, how are you so stupid? You lost 80% of your money on Palantir. Zero's better than minus 80. Thank you very much, moron. Of course it is. And it's going to be a lot worse for you. And I'm so happy. I'm so happy. Luckily, you live in the Ukraine, and you can probably buy a hut there for $4. So that's probably why you're going to be okay over there.
Yeah.
Moron.
Anyone else you'd like to address?
Meet Kevin. Nice hair, dude.
Meet Kevin's having a rough month.
He shaved it now?
Meet Kevin's having a rough month.
Oh, God.
32 million total portfolio down to 20.
Oh, really? That's weird.
In a month.
I want to be so cocky and say how much I made in the last month.
Then he sold out, which you know, and I guess he's, from my hearing, he's turning off comments. He's a mess. And
yeah, he's an
poor
idiot.
Graham Stephan, I think the truest one of them all, has to sit in these stupid shows with them and wince as these idiots.
So look, I grew up in a time in the stock market where shit talking was just the way of life, guys. I grew up on forums like StockTwits that are still hypercritical today. It's given me a backbone, it's toughened me up a little bit, and I'm one of those people that shit talk too, guys. I think it's fun, but I'll never take it to a personal level. I love when stocks go down because then you can cost average into your favorite assets always, but how you go about doing this is questionable, because you can't always be cost averaging in to crazy growth stocks, because sometimes they keep going down. And then you don't want to keep cost averaging into dividend stocks only, because sometimes they don't always go up as rapidly, even just as the general market. But I want to look at a bunch of different YouTubers today and just talk about this kind of intertwined conversation about how everybody is generally just shitting on everybody now. And I don't know how it's lifting them up personally, but I just think it's fun to point out. So first and foremost, guys, Everything Money has been calling out literally every growth investor because they're not doing good right now. And I just find it really intriguing, because if you listen to those guys shit talk Tesla, and I listened to them back in 2020, I would have missed out on one of the greatest growth experiences of my entire life. And we're going to talk about the risk that comes with this in a second. But on top of that, they would have told you to just buy Alibaba stock, and in the same time period, you would have picked one of the worst performing stocks out of a great growth cycle, right? But let's talk about Jeremy. I noticed that they crapped on Jeremy a little bit here, and Jeremy honestly has a pretty well diversified portfolio because he has a huge proponent of dividend stocks that have actually been excelling for him right now, because this is a period of a risk-off environment where dividend stocks generally just do better, right? But this guy primarily just talks about Tattooed Chef, a lot of growth companies. I know he doesn't talk as much about Palantir, but this has not been a period of growth. And he keeps saying to you, calm down, you know, this could take 3 to 5 years. These things inevitably come back. You know, the Dow stocks are the cheapest stocks, these small caps. And to be honest, that is highly true, but that doesn't mean that these things are going to come roaring back anytime soon, which could really hinder the growth of your portfolio against, say, the indexes. But let's talk about those pure dividend investors like PPCE. Now, I love PPCE, and this is kind of how I started getting more into investing, was this idea of passive income and dividends. But I realized I didn't want all of my money coming from dividends, because I'm a young guy. I got lots of years. I've got decades of potential growth ahead of me. And if I just focused on things like Johnson & Johnson, yeah, I would have got a pretty healthy return, but I wouldn't have gotten the return that even the broader index offers if you weren't just a heavy dividend focused investor. You gave up a lot on the table over the last little while just being a dividend investor. However, in this current environment, guys, if you told me ExxonMobil would be up 30% this year and really rebounded off those lows, I probably wouldn't have believed you. But you don't hear anybody talking about the oil sector right now, or commodity stocks. They're not the most popular, but they're outperforming all of these guys, and including myself right now, let's be real. But then we got the Meet Kevin styled investors. Now, I like to criticize Meet Kevin because I think he's a funny guy. I think he has to be taken with a grain of salt from the broader perspective view. I mean, take a listen to this video. This wasn't that long ago, by the way.
The point is, to me, real estate's freaking easy, because I look at this stuff and I go, I know what to do. Stocks, I don't know. So don't ever expect Meet Kevin to sell you a stock investing course.
See, my concern with Meet Kevin, and the reason I would want to criticize him, is because this is a guy that always kind of preaches the idea of passive income, long-term investing, but then paper hands the entire market, just becomes one of these hypercritical macro traders, which is weird to be selling a course and trying to lead people down one direction while you do something completely different. I think his criticism at this point is relatively well-deserved, but the guy is managing a $20 million portfolio. He's done very well for himself, and you can't criticize that. It's very hard to criticize what he's done and where he's come from, right? And I mean, that again comes along in line with Tesla, which arguably could be one of these luckier trades, right? Like SoFi was another big one for him that he recently just lost a lot of money trying to buy back into because he's primarily a day trader. But to well round off what I think all of this battering leads to is that diversity and risk tolerance is something I feel like most of this market doesn't understand right now. And this is where they're going to start learning to understand that a lot better. And I wish all of these guys kind of brought up the idea of risk tolerance better. And this is why I love Graham Stephan so much. Recently on Millennial Money, his hands started shaking because all of his friends have been critical of this next upcoming recession, and he didn't know if he should be selling down some of his portfolio and going heavier weighting into cash, but he finally resided and said, you know what, I'm going to stick to my plan of cost averaging into ETFs and companies that I like. And this is a conversation that I think largely needs to be had with everybody, because I don't care if you don't like Tesla, I don't care if you don't like growth, I don't care if you're just primarily a dividend investor. The mistake you're making is you need to understand all these facets and utilize them in a correct way that works for your risk tolerance. I think the reason that my portfolio has been able to do so well is because I like dividends, I like banks, I like REITs and utilities, but I also like the growth aspect of life because I understand things like Tesla overvalued. I understand MindMed and some of these companies are extremely risky, but there's periods in the market where each sector is going to perform better than another sector. But if you get caught up in Meet Kevin's way of thinking, I promise you're going to lose a crap ton of money. If you get caught up in the way everything money thinks, and that's just the only way is numbers and they have to make sense, then you're going to get caught up in downtrending stocks that for no reason need to turn around because they're out of favor. And just because the numbers make sense don't always mean the stock's going to do well, because if the numbers were the only thing that mattered, Tesla wouldn't have shot up 1,000%. There's a lot of proponents and moving aspects to this market that nobody can predict in the macro. And the only way to actually perform well here, guys, is to utilize every aspect of this, because in a period where my growth stocks aren't going to be doing that well, guess what? I'm still getting a paycheck every single month for my dividends that I am reinvesting into this market. And it constantly reminds me of the value of ETF investing and the idea that, yeah, growth is trading down a lot, like Jeremy is always saying, but that doesn't mean you should just be cost averaging into these downturning small caps, because again, there's no reason that they're just going to come back. That could be a year from now, that could be 3 years from now. Meanwhile, ExxonMobil is hitting all-time highs. The indexes are holding relatively flat, and it really hurts seeing an index up 20% while your growth stock's down 50 to 80%, right? And I just feel like a lot of these guys get too concentrated. And even though on this channel, I like talking about what I love, like Facebook, like Tesla, and I get really caught up sometimes in the macro stocks rather than talking about the broader view picture, which is why every single week I always show you my portfolio so you understand where I'm coming from. Because when I get hypercritical of individual investments, because I love debating individual investments, I love shit talking and kind of getting involved in this drama now and again, guys, doesn't mean that I don't think every single person should be taking all this in strides and looking at the broader view of their own risk tolerance and understanding exactly what they're doing, because nobody wants to head into retirement. And dare I say, even if you're a lot younger, nobody wants to see their growth stocks dropping 80%. But I think this is a point in time where people start realizing why the broader view picture matters so much and why being one way or another isn't going to bode well in any direction. Now, I can't tell you what your risk tolerance is, but it's important to remember that if you're into day trading or you want to try that out, make it a percentage weighting of your portfolio, maybe no more than 5, 10, or 15%. Always make sure that, you know, I've started to make this a proponent in these volatile times, the understanding that ETFs really matter here, guys. And I know Jeremy's not the biggest proponent of ETFs, which is why I think Graham Stephan's philosophy of you can own index funds while also owning Bitcoin. You don't have to shy away from any of these environments, because the biggest mistake you're going to make is if you're shying away from one environment is you're missing out on probably one of the best opportunities that exist in the market. You might be overpaying for it, but guys, if you're my age, I'm not talking to everybody, but I'm not even 30 years old yet. So, I mean, if Tesla drops 50%, if Facebook drops like it has here, guys, it's not the end of the world. I've got 10, 20, 30 years to see how that position pans out over time, right? Now, I know that's going to be different for everybody, but I can only speak for myself because you can't take this as financial advice. But I hope just having this broader view conversation and trying to shit talk less, I think that's what I'm going to start doing, because I've been shit talking a lot recently and it's fun, but I don't think it actually helps any of you out. And I really think it starts making people feel a lot worse about their investment style, because you probably lean more way into one or the other. But I'm hoping you're starting to listen to everybody and you're starting to see how all of these segments make a difference in your financial life and offer financial stability. And the goal that we all have is FIRE, financial independence, retire early, is presumably why you're watching this channel. But I want to pass this question off to you because, like I said, I've just been feeling super uncomfortable listening to everybody lately being so hypercritical of everybody else, and it's just not fun. It puts everyone on edge. It makes them second guess what they're doing. And I don't think it's healthy here, guys, especially when we're going into a period of volatility where, this is the period in time where you get the best advantages sometimes out of your favorite stocks, not something to shy away from or be fearful of, listening to these doom and gloomers while also listening to these pumpers, right? So just be careful out there. Stay cool, stay awesome. And as always, I look forward to catching you in the next one.